Hello and good morning to all. Myself, Abhishek Doshi, and I am here to discuss with you all the topic of Annual Return and Audit under the GST with special weightage to the important issues for financial year 2018 and 19. Friends, we all know that we are in this lockdown period and we cannot go outside, right? But we can definitely get updated ourselves, and therefore we at KSD and Associates have taken this initiative of knowledge sharing. And this knowledge, as a part of this knowledge sharing activity, we are here with this topic. So let me start with our today's topic. Right. So as we discussed, this is our today's topic: annual return and audit under the GST with important issues for financial year 18-19. As we all know that we are working from home at this time, and I thought that this topic or this assignment of annual return and audit of GST maybe maybe easily we can do from the home, because we have finalized the books of accounts and audit has been done for the financial year 18-19, and all the data are readily available with us. So we can have the work of annual return and audit under the GST work as a work from home also. And I thought this session would be really helpful in executing this work. So let's start with the today's topic and what we will discuss. First of all, let's see contents. First of all, we will have the quick revision of the GSTR 9 and GSTR 9C. As we all know that we have just completed the GSTR 9 and 9C of 2017-18 in just last January, I think before 3 or 4 months, right? So we all are aware of the various tables of the GSTR 9 and GSTR 9C, and we are very well aware of what are the amount to be reported where. So I will not go into the detail of the nitty-gritties of the GSTR 9 and 9C, but we will have the quick revision of the GSTR 9 and GSTR 9C. In that quick revision, we will cover, first we will do the approaching of the GSTR 9 and GSTR 9C. Then we will have the structure. What is the structure of the form GSTR 9 and 9C? Then we will have the relaxation, or one can say optional reporting. The government has given various relaxation in phase-wise manner for the GSTR 9 and GSTR 9C reporting. And major relaxation have been come in the end of the last 2019. So what are these relaxations and what reportings are made optional? We will discuss that, because this is also really helpful, and at present also many of us don't know what fields are the optional or what fields are the mandatory. And then at last we will have the summarized approach for the GSTR 9 and GSTR 9C. Right, so this is about the quick revision of GSTR 9 and 9C. We will do around in 20 minutes, and then we will go to the specific issues for financial year 18-19. In specific issues, we will cover output tax liabilities, input tax credit. There are issues with reference to TDS and TCS, and then there are issues with reference to e-waiving. Right? So let's start with our first part of the session, quick revision of the GSTR 9 and GSTR 9C. In that part, we will do the, first of all, we will go through the approaching of GSTR 9 and GSTR 9C. Approaching means what are the preparedness required from our side. How we would approach the preparation of the GSTR 9 and GSTR 9C. So basically, what details we should keep ready before filing of the GSTR 9 and GSTR 9C. So we have done the GSTR 9 and 9C for the FY 17-19. So most of us all know about this, but still I will discuss some important issues. First and foremost important issue is understanding business of the registered person, including the nature of the other income. So it is very important. First, we have to identify what is the business of the registered person, whether trading concern, whether manufacturing concern, what are the commodities they trade, What are the commodities they manufacture? What is the raw material? What is the finished product? What is rate applicable to each and every product, right? Whether the registered person is engaged in export or SEZ supply, whether any of the supplies are exempt supply or not, whether they are executing any 0.1% supply or not. So we have to identify all these transactions and identify what is the exact nature of the business of the registered person. Then we will have to have idea of the laws prevailing at the relevant time of 1890, because the GST law has kept changing every time. The law has been changed, and constant there are amendments in the GST law. So what is important for this annual return is the law prevailing at the time of 1819. So we should have the idea of this. Then understanding of accounting system and software used by the registered person. This is very important because every registered person may have some different accounting system. More or less basics of the system will be same, but they may have some different systems. Say for example, many people have the different ledgers for the different GST ledgers, right? CGST, SGST, IGST. Some registered person may also maintain rate wise the CGST, SGST, IGST ledgers. Some people may maintain only one GST ledger for inward and outward, right? And some people may have the system of passing accounting entries to journal, or some people have the specific GST voucher system. So what is the accounting system followed by the registered? That is very important. Then what are the software used by the registered person and how that software helps in reporting or making compliance for the GST, right? Because normally nowadays all software comes with the GST enabled thing, and every software generates the GST reports. But when registered person is using any specific accounting software, it is very much important to know what is the system of the software, right? Say for example, for the GST enabled things, you have to pass entry to the GST voucher. But I have passed the entry for sales to general voucher. So it may happen that that entry does not get reflected in my GSTR 1 or GSTR 3B. And at the end of the year, there may be difference between the GSTR data and books of accounts. So it is very much useful which software is used and how that software operates. Then this is the basic thing, collection of the basic documents, all returns like GSTR1, GSTR3B that will be readily available with us. Audited, unaudited financial statements duly signed by the registered person. And then at last, summarize GSTR1, GSTR3B and draft GSTR9, which are readily available on portal. GST portal gives you the summarized GSTR1 and 3B for the entire year. That we should download, that will be useful in the reconciliation. Then we have to do the various reconciliation of various data. Which kind of these data are? First of all, outward supply and tax as per GSTR 3B and as per GSTR 1. So we all know that at present we are filing two returns, GSTR 3B and GSTR 1, but those two returns are not interlinked. So it may happen that there is a variation in both these returns, right? So GSTR 1 is only for outward supply, while GSTR 3B is for outward supply as well as ITC. So first of all, we need to match outward supply and tax as per the GSTR 3B and GSTR 1. After reconciling the same, we need to reconcile the outward supply and tax of the GSTR, that is GST returns either 3B or 1 or actual data with books of accounts. Right? Similarly, we have to make reconciliation for input tax credit as per 3B and books of accounts, and input tax credit as per 3B and with GSTR 2A. Right? We have done compilation and reconciliation of all this data. But what if there is a difference? There may be various reasons for the difference. We have to find out the reasons. The reasons may be various, but the result of the reason would be that either the tax has been paid excess or either the tax has been paid short. So if there is short payment of tax, we need to pay the same through DRC 03 channel, right? We will go into details at the last. What can be of what there are? How can be differences? What kind of differences may be there, and how we can resolve such differences? We will say we will see at the end of this presentation. Then in approaching GSTR 9, we need to check the GST applicability on the other income. It is also very important. Say for example, rent income. So I am discharging my GST liability on my entire turnover. But I have also commercial rent income, which attracts GST. And if I have not discharged the GST liability on the same, I need to discharge the GST liability on rent income. Even in case of proprietary concerns, when the personal books of accounts are maintained separately, right? So in my books of account of my proprietary concern, I have discharged the GST liability on all the incomes. But in my personal books of account, I have commercial rent income and I have not discharged the GST liability. Then I am supposed to discharge the GST liability on such rent income, and I should, if I have not discharged, I should discharge along with the interest. So likewise, rent income, there are many other incomes which may be there in the financial statements, and we need to check the GST applicability on the same. Another important point is that to check for the ITC reversal. ITC reversal are required on various grounds, right? Say for example, ITC used for the exempt or non-business supply, 180 days payment failure. Then there are various restrictions under section 17(5). For example, foods and beverages, car, construction, works contract, etc. So if any ITC reversal required on account of any of these reasons, and if the same has not been made, we have to be give effect in the annual filing of the same. One of the important thing of the ITC reversal is ITC reversal required for the exempt supply. It may so happen that I don't have any exempt turnover. My main item or my main manufactured or traded item is taxable, and I am discharging GST liability on entire turnover. But I may have some other incomes which is in the nature of the supply, but it is exempt supply. Say for example, sale of export license, right? At present, the export license sale is exempt under the GST. So I may have the sale of the export license, right? So it is exempt supply. So even though my total turnover is taxable, but I have some other income which is exempted from the GST, and I am required to make proportionate reversal of ITC for such exempt supplies of only what we can say is the common credits, right? So we need to check these things on annual basis if it is missed down on monthly basis. So after this approaching, these are just the screenshot where we can go get the annual summarized GSTR 1 and summarized GSTR 3B from the portal. This is the annual return format, and from there we can get GSTR 1 and 3B annualized format. And this is the comparison tab. By entering under this tab, we can have the various comparisons of output liability, ITC with 2A on monthly basis, and this comparison will really be helpful in our reconciliations of various data. Right? Then let's see what is the threshold for the FY 18-19. As we all know that there are many relaxations for the FY 18-19, and therefore it is important to understand what is the threshold for the FY 18-19. Every registered person except 5 categories of persons are required to file. Which are these 5 categories of persons? ISD, person paying tax under section 51 or 52, that is TDS or TCS, casual taxable person, and a non-resident taxable person. Except these 5 categories of persons, all persons are required to file GSTR 9 annual return. Due date for FY 18-19, we all know that recently they have extended the due date up to 30th September 2020. So at present, the due date for FY 18-19 GSTR 9 and 9C is 30th September. And threshold limit for 9 and 9C. Who are supposed to file the GSTR 9, for whom it is optional, who are supposed to file GSTR 9C, and for whom it is not required. So we have given this table for the category of person. First category of person is person who is having aggregate turnover below rupees 2 crore. For them, GSTR 9 is optional. They can file or they cannot. They may choose not to file their GSTR 9, and GSTR 9C is not required in their case. But it is our strong recommendation that every registered person should file the GSTR 9, because there it may so happen that GSTR 3B and 1 may have certain differences or certain unreconciled items. So if you file GSTR 9, it will helpful in making at the time of assessment. So below 2 crore person, it is optional, but it is advisable to file GSTR 9. Then registered person having turnover between 2 crore to 5 crore. For them, it is mandatory to file the GSTR 9 annual return, but GSTR 9C is not required. In 1718, the limit for the GSTR 9C was 2 crore, but now the same has been extended up to rupees 5 crore. So any person below the turnover rupees 5 crore is not required to file the GSTR 9C. Then aggregate turnover exceeding rupees 5 crore. So all the registered person whose turnover exceeds rupees 5 crore are supposed to file GSTR 9 as well as GSTR 9C. So both forms are mandatory for such persons. So this is about the basic threshold for FY 18-19. Then we come to the structure of the GSTR 9. What is the structure of the GSTR 9? GSTR 9 has been divided into 6 parts. Part 1 is just basic details, table 1 to 3, not more important. Part 2 is about the liability, outward supply details and outward tax details in table 4 and 5, one of the important part. Then part 3 is regarding input tax credit, table 6, 7 and 8. It is also one of the important part. Then part 4, table 9 is regarding the taxes paid details. Then part 5, it is regarding details of 18-19 but reflected in the GST returns of the 19-20. Right? The table 10 to 14 covers such reporting. And at last, part 6, other information, table 15 to 19. But part 6 has been made optional. Most of the tables are made optional, so it is not much important. Now we will discuss 2 or 3 important parts of the GSTR 9. First of all, part 2, table 4 and table 5. So as we all know that part 2 is for outward supplies and tax on the outward supplies, right? And it has been divided in table 4 and 5. If you see the difference of the table 4 and 5, the table 4 is for such outward supply on which tax is payable, and table 5 is for such outward supply on which tax is not payable. Say for example, exempt supply, export without tax, etc. If you see the heading of the part 2 is supplies made during the financial year. So what it reflects is you need to report entire supplies made during the financial year in the table 4 and table 5. Then table 4 is for outward supply that we have discussed. Then table 4 and 5 should reflect the actual figures based on the books of accounts. This was the hot discussion since the GSTR 9 has been introduced. What base should we take for the filing of the GSTR 9 and specifically filing of the table 4 and 5 of the GSTR 9? Whether we should go as per the GSTR 1, as per the GSTR 3B, or as per the books of account. So what press release suggests and what we should do is we should go for the actual supplies made during the year. Therefore, we should follow the books of account concept. However, the reconciliation of the books of account with the GSTR 3B and GSTR 1 is very important, right? Because we cannot directly put the figure of the as per books of account in table 4 and 5. Because table 9 is regarding tax payable and tax paid, and that tax paid figure comes from the GSTR 3B, right? So it is very much important that we take the figure as per the books of account, but the reconciliation with the GSTR 3B and GSTR 1 is important, and the tax liability will be adjusted according to such reconciliation. Then another important point for table 4 and 5 is that there are various reporting of credit debit notes at 4I to 4J and 5H to 5I, right? In this credit debit note reporting, only credit debit note with the GST impact should be reported and no accounting credit debit note. Say for example, I have simply given a one credit note for some discount later on, in which I have not given any GST impact. So it will be called as a accounting credit or debit note, and same should not be reported in the GSTR 9. Then reporting of the non-GST supply, including no supply in table 5F. So what will we report in this table, right? As we all know that there is a no clause or no table for the no supply reporting in your GSTR 1 or 3B. But they have additionally mentioned the word no supply in GSTR 9, right? So our suggestion is that we should not report the no supply data in GSTR 9, right? Because if you report in the table 5F, it will be considered under the head of exempt supply or non-GST supply. And as per the rules, I am supposed to reverse my proportionate ITC for the exempt or non-GST supply. So even if I report some of the no supply, which is not supply at all, if I report that figure under this column, it may attract the department's attention for the reversal, proportionate reversal of the ITC. So it is better to not to report no supply in the GSTR 9 annual return. Let's move forward. Now, what are the relaxations or optional reporting in case of table 4 and 5? Right? Table 4B to 4E, there is various type of outward supplies. In them, in those fields, they have given relaxation that you can report the net of the credit debit notes and amendments, right? So actual format was that you need to first report gross figures, and then in the bottom part of the table that you need to report debit credit notes and amendments. But they have relaxed that you can directly fill the net figures. But our advice would be that these figures are easily available, and we should report the gross figures and credit debit note figures separately. Similar relaxation for the table 5A to 5F. This is for outward supplies on which tax is not payable. In that also they have given similar relaxation that you can report the net of credit debit notes. Again, we should report gross figure to the extent possible. Then 5D to 5F. 5D to 5F is exempt, nil-rated and non-GST supply. There are three separate tables. So they have said that you can combine all these three figures and report under the exempt supplies. That is under 5D. One may choose to report such thing, but as we discussed in previous slide, we should avoid reporting no supply in this GSTR 9. Now let's talk about the table 6, 7 and 8. Table 6, 7 and 8 is about input tax credit tables. As we all know that table 6 is for the ITC availed, table 7 is for ITC reversal, and table 8 is for the ITC comparison with the two-way. So if we keep this structure in the mind, it will be helpful in compiling the data for the GSTR 9. Table 6A is auto-populated, and details of total ITC auto-populated in table 6A based on your GSTR 3B return, right? Then 6B to 6H is the bifurcation of the total ITC. So what is the total ITC in 6A? We need to bifurcate in 6B to 6H, and ideally the difference at 6J would be 0, right? Then there is importance of the table 8, right? In table 8, broadly we are making comparison of the GSTR 2A and ITC availed in the GSTR 3B. So first of all, if there is a difference, right? In 99% case, there will be difference because 100% tally with the GSTR 2A will not be possible in 99% of the cases, right? So if there is a negative difference, that means we have availed credit higher than the reflected in GSTR 2A. And if there is a positive difference, means there is a higher credit in GSTR 2A. So if there is a positive difference, they further ask in the 8E and 8F report the various on which account there is a positive difference. ITC available but not availed, and similarly various reasons. But one may choose not to report under these I8E and 8F because it does not have any legal consequences or legal impact. So we should stop at what difference comes in 8D. We should give the 8A as per 2A, 8B and C, ITC availed as per 3B, difference in 8D, and we should stop there only, right? The most important question in this table 8 is what is the legal consequences of the mismatch of ITC? If I have ITC in the books of accounts or 3B 1 lakh rupees and in 2A only 80,000 is reflected, what is the legal consequences for balance 20,000? Right? As we all know that GSTR 2 and 3 are not being operational. According to the rules for the ITC matching and reversals are still not operational, and there cannot be any legal compulsion to reverse the ITC which are not reflected in GSTR 2A. So ideally table 8 matching, if there is any negative difference, it cannot have any legal consequences. Yes, but the conditions of the section 16 should be fulfilled and my supplier should have paid the tax. Then there is no issue on my availment of the ITC, right? Further, this is regarding FY 18-19. As we all know that from FY 19-20, they have inserted Rule 36(4) for matching of the ITC with GSTR 2A. So we can say that till FY 18-19, there is no legal consequences for the mismatch of the ITC. Now, relaxation related to these tables 6, 7, and 8. 6B to 6E, they have given option to report all the ITC under the row of inputs only. As we all know, there is bifurcation of input services, and capital goods is required for reporting under 6B to 6E. But they have said you can report entire figure under the input row only. Similarly, 6C and 6D is ITC on reverse charge. They have bifurcated ITC on reverse charge in registered and unregistered person. But later on, they have given relaxation that you can report both the amount under the 6D only, and there is no need to bifurcate the same. Then similar relaxation in 7A to 7E. 7A to 7E are various ITC reversals in which they have given options that you can report entire ITC reversal under the 7H other reversal. And if you don't have the bifurcation, you are free to report everything under the 7H. Right? So this is the relaxation about the table 6, 7, and 8. Then one of the important table 9. In table 9, we have two figures, tax payable and tax paid. Both are auto-reflected on the basis of GSTR 3B. But the figures of tax payable is amendable. However, the figures of tax paid is not amendable. So figures of the tax paid will be as per the 3B only. Right? So if I have made any changes in the table 4 and 5, say for example, I have increased the liability in table 4 and 5, then I need to manually amend the tax payable figure in GSTR 9, table 9, right? It will not be automatically updated, but I need to manually update the tax payable figure under the table 9 of the GSTR 9. Tax paid will be on the lower side, so there will be difference, and that difference should be discharged through DRC 03 challan, right? Then table 10 to 13, we all know that these four tables are mainly pertaining to the transactions of the current year, which are reflected in the GST returns of the next year. Right? Say for example, sales or credit note for sales return or input tax credit availed or ITC reverse of any of these FY 18-19, but some has been reflected in the FY 19-20, first 6 months, April to September. Then these transactions or this tax amount will be reflected in table 10 to 13 and not table 4, 5, 6 or 7 or 8, right? Now they have given relaxation for table 12 and 13. 12 and 13 is for the ITC availed in the next year and ITC reversed in the next year. They have said these tables are optional, but it is our strong recommendation that we should fill these details because it will be helpful, very much helpful at the time of assessment and making reconciliation in the next years. If we don't have the such bifurcation of the ITCs, then it will be difficult to make reconciliation in future. And at last, table 15 to 18 have been made optional, right? Table 15 and 16 are regarding some other details of the refunds, details of the HSN of outward supplies, inward supplies. All these tables made optional. So one may choose not to report anything in table 15 to 18. Right? So this is all about the GSTR 9. This is all about our some GSTR 9 structure and relaxation. And last, we will have the summarized approach for the GSTR 9. Summarized approach for first we will see for the outward supplies, and then we will look into the summarized approach for ITC. So for outward supplies, we all know this, to compile the data of 3B and 1 for 18-19, to make reconciliation, and if there is difference, we need to resolve the same as per the below table, right? So this table is very important. We will take one by one row. So first of all, category of transactions which are reported in GSTR 3B and GSTR 1 of 18-19. Both are years, right? So I have correctly reported transactions in 1 and 3B for 18-19. Then there is no impact in 19-20, and the same will be reflected in part 2, that is table 4 or 5 of the GSTR 9. And second category of transactions, I have missed out the transactions in 18-19 returns, 1 and 3B both. and I have reflected the same transactions in 1920 GSTR 3B and 1. Say for example, one invoice of 1 lakh rupees with the 18,000 tax liability I have missed in 1890, but I have reflected the same in the GSTR of 1920, right? The same will be reflected in the part 5, right? It is either table 10 for sales or table 11 for the sales return or reduction in tax liability. I will reflect in table 5 of the part 5 of the GSTR 9. Then there is a category of transaction in which I have discharged the tax liability in GSTR 3B. So in GSTR 3B my transaction is correct, but I have missed that sale in the GSTR 1. Say for example, one invoice of 1 lakh, I have discharged the liability in 3B, but that 1 lakh invoice has not been reflected in GSTR 1, and I have not corrected the same in 1920 also. So here the tax has been discharged, so it will be part of the part 2 only in table 4 or 5 of the GSTR 9. And I have discharged the tax properly, so I am not supposed to discharge any additional tax liability. Now reverse case. I have reflected the transaction in the GSTR 1, but I have not discharged the tax through GSTR 3B. So say for example, invoice of 1 lakh rupees has been reflected in GSTR 1, but the same has been missed out in GSTR 3B. 1920 I have done nothing, right? So here this transaction will also be classified under table 4 of the GSTR 9 part 2, that is, but the tax has not been discharged, so there will be short payment of tax, and that tax liability need to be discharged through DRC 03 channel. Then the transaction which is completely missed out, I have not reported in the GSTR 3B or 1 of the 1890 as well as the GSTR 3B or 1 of the 1920. In that case also I will report that transactions in part 2 of the GSTR 9, that is in table 4 or table 5, and if there is a there will be short payment of the taxes and same need to be discharged through the DRC 03. So at last we can say total tax payable as per books of account should be tallied with tax payable as per table 4 and table 10 less adjustments as per table 11. So table 4 plus table 10 minus table 11, ideally it should match with my total tax payable as per the books of account. Then summarize approach for the input tax credit. Again, as we say, we will compile the data of 3B for 1890. We will make comparison of the 3B data with books of accounts and GSTR 2A, and we will go or give effect as per the below table, right? Say for example, first row, ITC of 1819, I have availed in 3B of 1819. So 1920, obviously there is no impact. The same will be reflected in the GSTR 9 part 3, that is table 6, right? Some ITC I have missed out in 1819, ITC of 1819, but I have not taken in 3B of 1819, and I have availed in the 3B of 1920, right? That will be reflected in part 5 of the GSTR 9, that is table 13. I have not reflected GSTR ITC in GSTR 3B of 1819 as well as 1920. That is a period allowed, April to September 1920. Then what will happen? Then as per the instruction of the GSTR 9, I cannot avail such credit because the time limit for availment of credit has been lapsed. So again, total ITC will be ITC as per table 6 and 13 less reversal as per table 7 and 12. So this amount, table 6 plus table 13 minus table 7 minus table 7 and minus table 12. This will be tally with my ITC, net ITC as per my books of account, right? So this is all about the GSTR 9. Now let's move to the GSTR 9C. First we will have the look at the structure of the GSTR 9C. What is the structure of the GSTR 9C? Reconciliation statement. It has been divided in part A and part B, and part A has been further divided in 5 points, right? Part A is various details regarding the turnover, tax liability, ITC, etc. While part B is certification by the chartered accountant or post accountant. So part A point 1 is regarding basic details, table 1 to 4, more important, just basic details. Part A point 2 is table 5 to 8. It is mainly reconciliation of the turnover, right? reconciliation of turnover with books of accounts and GST data, right? These are the covered under table 5 to 8. Then table 9 to 11. It is regarding reconciliation of the taxes paid as per the books of account and as per the GSTR 9. So table 9, 10 and 11 is for the reconciliation of taxes paid. Then table 12 to 16, right? It is various details regarding input tax credit and reconciliation of the input tax credit. Then part A, point 5, that is auditor's recommendation due to non-reconciliation. So here the important word is due to non-reconciliation. So if there is any additional recommendation, liability recommendation due to non-reconciliation, I may report under the part A, point 5, and this will be under the point 5 or para 5 of the form, right? And then part B regarding service certification. Certification has also been divided in two parts. When the person who is signing the books of accounts and signing 9C are the same, and when the person who is signing books of accounts and signing 9C are different. There are two categories of certification. So this is, we have learned about the basic structure of the GSTR 9C. Then there is a scope of the GST audit, right? There were lots of debate what is the scope of the GST audit and how far the CS should or post accountant should go, right? The CBIC by press release dated 3/7/19 has clarified the role of the chartered accountant. The important line is last two lines, underlined lines. The role is limited to reconciling the values declared in the annual return from GSTR 9 with the audited annual accounts of the taxpayer. So what this press release is stating, that the role of the chartered accountant is limited to reconciling the values of GSTR 9 with the books of accounts. So main responsibility of the CA is reconciling the values under the GSTR 9C. So we should keep in this in mind when we are exercising the GSTR 9C. However, there is a specific certification in the 9C regarding accounts and records maintained, right? The CGST rules prescribes so many details about the accounts and records to be maintained by the registered person, and we as a chartered accountant need to certify the same, what kind of the accounts and records are maintained and whether all the records and accounts required as per the CGST rules are maintained or not. So we need to look into the same, and we need to list out what are the requirements of the accounts and records and whether same has been maintained or not, right? Then what are the attachments to the form 9C? Everyone is required to attach audited balance sheet and audit profit and loss account along with the 9C. Audited cash flow statement is also required to be attached. However, it has been made optional in the cases where the cash flow statement are not applicable. So cash flow statement has been optional. And any other attachments. It is always advisable that we chartered accountant attach statement of observation, disclaimers and notes, right? Some separate attachments should be made where we disclose our various observations or various disclaimers or various workings for the form GSTR 9C. It will be helpful in the later stage. So we have seen the structure of the GSTR 9C, and now we will take some of the important tables of the GSTR 9C. So broadly speaking, the GSTR 9C has been divided in three parts. One, turnover reconciliation. Second, reconciliation of the tax liability. And third, reconciliation of the input tax credit, right? So table 5 and table 7 is regarding turnover reconciliation. Table 5 is first of table and at most important of the turnover reconciliation of the books of account and turnover as per GSTR 9, right? Now in table 5, one of the important thing is what should be reported the 5A. 5A is for turnover as per the audited financial statement, right? In normal any kind of financial statement, we will have the revenue from operations on which GST has been discharged, and then we will have the other incomes. Under the other incomes, some of the incomes may be such that on which GST is applicable and discharged. Some of the income may be such that on which GST is not applicable. right? So in 5A, whether we should report revenue from operations or we should report all the revenue attracting the GST, right? So if we go to the definition of the turnover, it includes all supply. So ideally we should report revenue from operations as well as the other incomes on which GST has been charged or attracted, right? We should report entire thing under the 5A, and then we should give separate working in the notes about what figures has been mentioned in the table 5A and how that figure has been derived. Alternatively, one can do that. They reflect the figure of revenue from operations, and then if there is any other income on which GST has been discharged, that other income has been adjusted in table 5O, other adjustments, and the separate working of the same may be given in the notes specifying that these are the other incomes on which GST has been discharged but not considered under the revenue from operations, so has been added separately in the table 5O. Both are the options. One can go as per their wish. Then table 5O, it is very important to give the bifurcation of the amount mentioned at the table 5O, right? Table 5O is adjustment on account of other reasons. So if I have given figures of, say for example, 20 lakhs in the table 5O, it is very much important that I give the bifurcation of those that 20 lakhs in my notes or disclosures, how that figure of 20 lakhs has been worked out, right? Similarly, table 7 is taxable turnover reconciliation. So table 5 is total turnover reconciliation. Then table 7 is taxable turnover reconciliation. Then table 9 is tax liability reconciliation, right? In tax liability reconciliation, we need to give rate-wise bifurcations of the output tax liability. And we also need to give rate-wise tax liability of the RCM liability, right? So total liability will be tallied with the GSTR 9. So normally we will get easily the rate-wise bifurcation of output tax liability from the software or from the data of the registered person. But it may be difficult to get the rate-wise bifurcation of the RCM liability if same has not been made in each and every month, right? So in that case, we need to work out the rate-wise bifurcation of the RCM liability, and same will be reflected in table 9. Then table 12, input tax credit reconciliation. In this table, we need to mention the ITC as per books of accounts, then ITC booked in earlier year but availed in current year, or ITC booked in current year but availed in the next year. These two adjustments will be made in 12D and 12C. And then 12D will be the total ITC as per books of account. The total ITC will be matched with the total ITC of the GSTR 9, right? So now we have done all this reconciliation in our GSTR 9C, and now there may be additional tax liability due to non-reconciliation of any of this amount. Say for example, output tax liability in books of account is on a higher side than the discharge in the GSTR 9, then there will be additional tax liability. ITC availed in GSTR 3B is on a higher side than compared to the books of account, then there may be additional tax liability, right? And turnover or tax liability in books of account is higher than the reflected in GSTR 3B and 1, then there may be additional tax liability. So all this reconciliation, if there is any unreconciled amount, we need to give reasons for the same, and it may attract the additional tax liability. Now there are also various relaxations given in the reporting of the GSTR 9C. First of the relaxation for the table 5. There are various details or various grounds given in the table 5B to 5N, which may be the reasons for the reconciliation between books of account and GST data. So I need to report various amount on the field wise on 5B to 5N, but they have said that you can mention entire difference in 5O itself, right? But our advice would be, it is strongly advisable that we should report each and every amount against each specific item, and if we are reflecting any item under the 5O, then detailed bifurcation of the 5O should also be given. Say next relaxation is in table 12, table 12B and table 12C. it is regarding ITC booked in earlier year, taken in current year, or ITC booked in current year and taken in the next year. So they say that these details are optional. However, again, it is advisable that we fill the details in 12B and 12C, because 12 it will be also matched with the table 12 and 13 of the GSTR 9, and it will be very much useful at the later stage at the time of assessment and any other proceedings, right? And then at last, table 14. Table 14 was regarding the expense wise bifurcation of ITC, in which we need to give bifurcation of the total ITC on the basis of the expenses. For the purchases, this much ITC has been availed. For so and so expenses, this much ITC has been availed. This table, entire table, has been made optional, and one may choose not to report anything under table 14, right? Now